The government of Canada says inflation is under control. That's a total lie. The real inflation rate of your money is well over 8% a year, and nobody is talking about it. The government CPI only tells half the story, and for Canada, half of that story is currently 3%. But to see the full picture, you need to take CPI and add the annualized money supply growth in order to see your entire inflation number. And when you do this, the real picture becomes terrifying. In this video, I'll show you the charts, the data, and why Canadians are losing wealth twice as fast as they think they are. Here's the proof. Since 1971, the Canadian money supply has expanded over 10,000%. Meanwhile, CPI from 1971 to the present is only clocking 700%. We are given CPI to nullify the perceived effects of inflation. However, when you put two and two together, the annualized inflation rate becomes that of double digits. I'm talking 11, 12, and even sometimes 15%. In order to measure real inflation, we need two components. The first is CPI, and the second is M2, or money supply growth. In order to get the real inflation number, we need to take CPI, Consumer Price Index, and add it to the money supply annualized growth rate. Now you can see here with this chart, I've overlaid it against the S&P 500 and US M2 growth. So what does that mean? As a proxy, we can look at the S&P 500 and the TSX to gauge the growth and the velocity of money supply. As I said before, the Canadian money supply has grown over 10,000% since 1971. Do a simple equation to come to the conclusion that the annualized M2 money supply growth in Canada is right around 8.3%. Our money is being debased, diluted. Our wealth is being stolen from us at approximately 8% a year. Taking the current stats from Canada with the money supply growth and then the mean CPI, which is the Bank of Canada's preferred method of measuring CPI. So a mean is just an average. The mean CPI is currently sitting at 3%, and we add it on top of the M2 money supply growth, and we are left with an annualized inflation rate well above 11%. Let that sink in. The government tells you inflation is 3%. Meanwhile, the real rate of inflation, the real rate at which you're losing purchasing power in the Canadian dollar, is 11%. With that real inflation rate in mind, this is when it becomes really important in determining the real annualized growth of your assets. So a lot of pension funds, a lot of 401ks, retirement funds, and even investment portfolios that you get to go to a bank hold government bonds. And now here I've taken the government 1-year bond in Canada just because it's the closest proxy we have to the current policy rate. The current policy rate in Canada is 2.75%, and the yield on the 1 year is about 2.7. And when we use the real inflation of 11.5%, its current value, and we take that away from the rate at which bonds are paying us, our 401ks, pensions, and retirement funds, and investment accounts at the banks are paying us, the picture is even more terrifying. So we take the rate of the 1 year, the 2.7%, we subtract the real inflation number, 11.3%, and we are left with a real rate of return from holding government debt of minus 8.3% annualized. Your 401ks, your pension funds, your retirement accounts, your investment accounts at the bank that put your money in a 60-40 portfolio are losing you 8.5% annualized. Yes, they offset that with some equities, hopefully. However, if you're mainly or only holding government debt, you are losing. And now, the Canadian dollar paints this picture very well. This real inflation rate gets routed through the currency. So the currency is the main outlet to bear this 11+% inflation annualized. They're not debasing it against gold, against a Bitcoin. The Canadian bank is debasing against the dollar and against real estate. This scenario, current reality, would look extremely bleak if we didn't have something like Bitcoin as an escape valve. I'm going to flip back to the last chart after I explain what we're looking at here. Here we have Bitcoin priced in Canadian dollar. Here we have Canadian dollar priced in US dollar. Bitcoin, Canadian USD. Bitcoin Canadian, Canadian USD. Bitcoin is the only proper escape valve countries, sovereigns, and individuals like you and me have to quietly, peacefully exit these repressive inflationary regimes. When these regimes come about where inflation is above 10, 11, 12%, we now have the option, guys, to opt out, to save our purchasing power. And the best thing about Bitcoin right now is it actually grows our purchasing power over time too. Not only do we save, we can grow. Now that you guys know how to measure true inflation, I hope this will lead you to make better investment choices. Understand that if it's not beating 11.5%, 12% annualized, you're losing purchasing power real time.